Think back to your very first job. Maybe it was part-time. Maybe it was decades ago. Now imagine this, that year, and several others just like it, are completely missing from the one government record that controls every Social Security dollar you'll ever receive. Not because you did anything wrong. Because of a typo. A name mismatch. A number transposed by a payroll clerk at a job you held 25 years ago. Today I'm going to show you where to find that record, how to read it, in under 2 minutes, and exactly what to do if something is wrong. This is one of the most important financial checks you can do before you claim, and most people never do it. Let's start with something simple. The Social Security Administration keeps a file on you. Think of it as your lifetime paycheck history, every dollar of wages you've ever paid Social Security taxes on, going all the way back to your very first job. That file is what they use to calculate your monthly benefit when you retire. Here's the problem most people don't know about: that file is not always accurate. And the SSA has been surprisingly candid about it. Their own internal data shows that hundreds of millions of wage records, wages that were reported by employers, were never successfully matched to a worker's account. The numbers are staggering, but here's the one that matters. The SSA adds roughly 8 million new unmatched wage items to its error backlog every single year. And here's the part that should concern you most: the SSA itself has confirmed that the legal responsibility for catching and correcting these mistakes falls on you, not the agency. They are not going to call you. They are not going to send a letter. It is your job to check. But here's what many people miss, and I'll show you this in detail in a moment. The money you lose from an uncorrected record doesn't just come out of your check, it can affect your spouse's benefit too, for the rest of their life. Now let me ask you a few quick questions because some people face a much higher risk than others. Have you ever changed your last name, through marriage, divorce, or any legal name change, and not updated it with Social Security? If the answer is yes, here's what may have happened. Your employer filed your W-2 under your new name. But the SSA's system still had your old name. That one mismatch is enough to route your entire year's wages to an error file, leaving that year blank on your record. And if it happened once, it may have happened for every year after that. The fix exists. It's a simple form update. But if you never filed it, those wages may still be sitting uncredited right now. Have you ever been self-employed, done gig work, or freelanced? For traditional employees, employers send your earnings directly to Social Security. But for self-employed workers, the data goes through the IRS first, and that extra step creates more opportunities for something to get lost. Here's something new that gig workers especially need to hear. As of January 1, 2026, millions of gig workers will no longer receive a 1099 form for smaller jobs. The reporting threshold has changed. But the SSA's rule has not changed. If your net self-employment earnings are $400 or more in any year, you are still required to file and pay those taxes. If you don't, because no form arrived, that year shows up as 0 on your Social Security record. And if you've had many employers over the years, your risk goes up with every single one. Each employer is a separate data entry point. One wrong digit in your Social Security number on a W-2 is all it takes to erase that year entirely. Before we look at how to check your record, I want you to understand exactly what's at stake, because the numbers are real. Imagine someone who worked hard their whole career and consistently earned around $80,000 a year. Because of a payroll error at one employer, one wrong digit, a single high-earning year is recorded as 0. With a correct record, their monthly benefit at full retirement age comes to around $2,879. With just that one missing year, it drops to around $2,818. $61 a month. That might not sound like much at first. But here's the math. Over 20 years of retirement, that single uncorrected error costs more than $14,500. Over 25 years, it exceeds $18,000. And that loss is permanent. Once your benefit is locked in, there is no automatic adjustment. Now here's what most people don't think about. If your spouse relies on a spousal benefit, which is calculated as a percentage of your record, your mistake becomes their reduced income too. And if you pass away first, your surviving spouse inherits your monthly check. A record error doesn't just affect you. It follows your family. Now let's do something practical. The tool you need is called My Social Security. It's a free online account at ssa.gov/myaccount. If you don't have one yet, set it up today. It takes about 5 minutes. When you create an account, you'll verify your identity through a secure service. You'll need your name, social security number, date of birth, and a photo ID like a driver's license or passport. One heads up, if you have a credit freeze on your accounts, the automatic identity check may not go through. If that happens, there's a video verification option through one of the services. Once you're in, look for your Social Security statement. Inside that statement, there is a table titled Your Earnings Record. This is the document you want to look at carefully. It lists every working year from your first job to the present. For each year, you'll see 2 numbers. The first is your earnings for Social Security purposes. This is the number your benefit is built on. Don't be alarmed if it's lower than what you actually earned. There's an annual cap on Social Security earnings, and anything above that cap simply doesn't appear here. The second column is your Medicare earnings. Medicare has no cap, so this reflects your actual total income. Here's a quick check. If the Medicare column shows a number for a year but the Social Security column shows 0, that's a red flag worth investigating. Scan the table year by year. Are there working years where the record shows 0? Are there years where the number seems much lower than what you earned? Do your early working years show up at all? Don't worry about memorizing these steps. At the end of this video, I'll give you a simple checklist of everything to do. If you can't access the portal online, you can request a paper statement by mailing a form to the SSA. It arrives in about 4 weeks. Now, finding a number that looks off is one thing, proving it's wrong is another. Here's the simplest way to verify. If you were an employee, find your old W-2 forms, look at box 3, that's your Social Security wages for that year. That number should match your SSA statement exactly. If you were self-employed, look at the Schedule SE attached to your filed tax return. The earnings reported there should match your SSA record. What if you don't have your old paperwork? The IRS keeps records too. You can request something called a wage and income transcript. It's free, takes about 10 business days, and lists every W-2 and 1099 ever filed under your Social Security number by employers. In a moment, I'll tell you the one document that can save you months of frustration if you ever need to file a correction. But first, the most important deadline most people never hear about. Here's something the SSA does not advertise loudly, but it's written directly into federal law. There is a time limit on correcting your earnings record. Under the Social Security Act, you generally have just over 3 years after the end of any calendar year to request a correction for that specific year. After that window closes, the law treats the SSA's records as final. Let me give you a real example. If wages from 2021 are missing from your record, your window to correct that officially closed in April 2025. This is why checking your record once, right before retirement, is not enough. An annual review is the only reliable protection. That said, there are a few exceptions built into the law. If the error is a clear mechanical mistake in the SSA's own files, or if your wages were accidentally posted to the wrong person's account, corrections can sometimes be made after the deadline. But these exceptions are narrow, and you should never count on them. And there's a second deadline that's just as important. Once you file for benefits and the SSA issues your award, that calculation becomes binding. After 4 years from your award date, you cannot reopen it, even if you discover an error later. Any correction would only increase your benefit going forward. All the money from those earlier years is permanently forfeited. So the window to act is now. before you claim, not after. If you find a discrepancy, here is exactly what to do. There is one main form for this. It's called the Request for Correction of Earnings Record. You can find it on the SSA website, but it cannot be submitted online. You'll need to mail it or bring it in person to your local SSA office. Along with that form, you'll need documentation. And this is where that one document I mentioned earlier comes in. The strongest evidence you can have is a W-2, specifically your employee copy. That single piece of paper can resolve most disputes quickly. For self-employment income, include your tax return with the attached schedule showing your self-employment earnings. If your former employer is out of business and you can't locate your W-2, don't give up. Bank records showing payroll deposits, old pay stubs, or state workers' compensation records can all be used as supporting evidence. The SSA's goal is to resolve these requests within 6 months. If your correction is denied, you have the right to appeal. First through a reconsideration review, then before a hearing officer, and ultimately in federal court if necessary. You have 60 days from any denial to take the next step. 2 more things, and these are quick. First, if you served in the U.S. military before 2002, you may be entitled to special wage credits that were never automatically added to your Social Security record. An SSA audit found that military service errors account for approximately 60% of all earnings record mistakes caused by SSA field offices. If that applies to you, bring your military discharge papers, your DD-214, to your local SSA office at least 3 years before you plan to retire. Ask them to manually verify your military credits are on file. Second, if you ever changed your name and didn't update your Social Security record, do that now. It's a simple form, and submitting it with your name change documents can trigger a search of unmatched records, potentially crediting wages you didn't even know were lost. And one more update worth noting: if you previously had your benefit reduced because you received a pension from a job that didn't pay into Social Security, that rule was repealed effective January 2025. If that applies to you, contact the SSA to confirm your benefit has been recalculated. Here is your complete checklist. Step 1. Go to ssa.gov/myaccount and log in or create your free account. Pull up your Social Security statement and open the earnings table. Step 2. Review every year. Look for zeros in years you worked. Look for numbers that seem too low. Step 3. Compare what you see against your W-2 forms or tax returns. If you don't have those, request a free wage and income transcript from the IRS. It's free and covers up to 10 years. Step 4. If you find an error, file the correction form with supporting documentation, ideally your W-2 or tax return. Don't wait. The correction window is time-limited. Step 5. Make this an annual habit. Check every year after you file your taxes while corrections are still possible. If you changed your name and didn't update Social Security, do that today. If you're a veteran who served before 2002, bring your DD-214 to the SSA before you retire. The steps are simple, the time to take them is now, before you claim, while your options are still open. Now that you know how to protect your earnings record, the next question most people ask is, when exactly should I claim? Claiming just 1 year too early can permanently reduce every check you'll ever receive. In the next video, I break down the exact claiming ages, what each one costs you, and how to figure out the right timing for your situation.